Hey, it's Clay Trader. This will be a video chart on ticker symbol UNXL. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to use this time frame. I think that's a good job of telling the quote-unquote story of the price, and then just makes mapping out levels of support and resistance a bit easier to see. And from a charting perspective, a very interesting setup here has taken place. And that's just based off of how the price reacted within the grand context of things. Price had the big gap down, and then after the gap down, the price, just started to go sideways. And you may be thinking, well, going sideways is bullish. Well, yeah, again, context. Considering that it just got beat down, and if you've traded long enough, then you know exactly what I'm talking about, because you've seen stocks that gap down, and then even after the gap down, the price just continues to bleed and bleed and bleed. But that didn't happen here, right? The price went sideways. Now, also, don't get me wrong, just because the price went sideways after a big gap down is not me sitting here saying, therefore, this is guaranteed to bounce tomorrow. I really wish the market was that easy, and I wish I could say that because it gapped down and it's going sideways, that, okay, that means the price will bounce every single time. Markets, no such thing as a guarantee. Now, would I be shocked to see some sort of bounce? No, it would not be shocking. But again, no such thing as a guarantee. So, I keep saying it went sideways. It went sideways. So how do we quantify that? Well, going sideways in my mind is just where the bleeding stopped today, and that was down there at the 5-cent mark. So you definitely want to see the price stay up above 5 cents. Just for the very obvious reason, if the price doesn't stay up above it, well, then that implies that this is not the bottom, because now the price is putting in a new low. So, very simplistic approach there. But in the event the price does start to bounce, where are some of these key levels of resistance at? 2 main points. The first one, if any sort of decent bounce is going to get started, is right there at 7 cents. I realize it's kind of hard to see because of the formatting with the big gap down. But many times this afternoon, the bulls did try to get up through that level, but you can see right there, just time and time again, the price kept getting rejected. So 7 cents is definitely that key hurdle where if there's going to be any sort of chance at a bounce, 7 cents needs to be broken. And that's definitely public enemy number one going into tomorrow. So big volume today, nice sideways price action. And within the context of things, that presents a very interesting trading setup. I should note that if you're not good with risk management, you don't like to honor stop losses and stuff like that, then these are not the chart setups for you. But if you do understand RVR trading and how to be disciplined and honor stop losses, then yeah, this could be quite an interesting setup. So we'll see how the rest of this week unfolds. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.